Good morning. Time 5:59 a.m. Pacific Standard Time, 10/4/2011. Here on this very morning, starting the second day of the new quarter, how short we were the last one and how they've started the red October, which is good because as we get down to lower pricing levels, we are going to actually hit a bounce that's going to come in there with a reversal bar to the breakout side of the market with holding half bar accumulations straight across the teeny line board. Not only that, it will be once again the type of price volatility the prior day, such as yesterday in the market. There was a lot of electronic high frequency volume execution in the actual buy and sell tape. That number was increasing, and it was clearly seen between the bid, the ask, between the public bid and ask, and how that tape was somewhat very, very, very weak because it was a very long left side of the market. And what that was that short side was working because every time you would get your entries, and then of course you would get the perfect exits for, your $2.50 trade or whatever it was, but you were getting that side, and then the other side coming down is where the yield has been paying. Okay, and that's where they bounce. You trade them long and then re-short them again. And that's why they make lower lows throughout your trading range. Today, we have the culprits on here that are being unwound. You got your bull. You've got your Google on that gap down list. Look at that Amazon. We have people on that. But here's our little friend ISRG. What's the Da Vinci units, okay? And what they basically do is robotic surgery. Joy Global, and a lot of these things. I got that Green Mountain Coffee in there, and I got that Baidu. Look at here, bloated stock that we talked about. Having some of those shorts in that retail because retail takes a longer period of time to drop. But when they do start to drop like Ross stores, in the overbought area, they're going to pull back. Here's that other little culprit, Signup, right here, down $1.80. So it's not a huge pre-morning gap down, but it's still there. And as the wall of worry increases, we're at extremely high levels, MMTs, the fear indicator, the VIX, and the VXN. 60-minute chart, market volatility index. Wow. It started to break higher, MMTs, and what will have to happen today is that when we do get that left elbow gap down, is that once again, every rule will apply in your market maker transaction model. As the fear goes higher, we will drop down and find very good price support levels that we will be looking for an immediate ascending breakout of, let's say, 3 teenies. Yesterday, there was a lot of them. And then, the markets kind of, there wasn't no buyer there. So we're going to be coming down to market levels now. And in the shorter term, yes, you will be looking for a much stronger bounce today when those events occur in the price action than you had the previous calendar day. MMTs. Watch all eyes out on the TQQQ. That Amazon will come down and it will rip right off that bottom. And the difference in the price action today is just as I said, that they would clock in strong. Let us not forget price line that's been shorted from that 549 area down 100 handles, printing out 443.83. Why? They had to take it down and shake everyone out of it. At some point, we're going to be looking at a 440 call, right along with our Googles and everything else and our Apples and the Apple debut. I'm going to do in a separate video on the opening bell. It's kind of a contribute to their new products and whatnot. You know, just as a leading company in innovation and creativity. They did good. So, left elbow gap down, price increase, closing above the previous half bar. The higher closing half bar above the previous one for the upside move is that ratio MMT would be, let's say, the higher that it goes, the stronger that current price level is. And there would be more buyers in control, and that the sellers would be swept aside, and then the buy action would continue. That's what you're going to be looking for. Should the fear break to a very high right here on the VIX, that's the VIX, and you can take a look at it. It's just a 60-minute chart, but you can see where the highs were back over here on 8.4, okay? So what I'm trying to tell you, MMTs, is we were back here. Remember when we were shorting August and going long and short, really, and we were having lots of fun when we put in these highs? Well, when you take a look at this chart here, MMTs, if we go up and someone's watching the 3-minute chart and within a 60, you start to see a blow off top and then a big reversal. And what would a reversal look like? It'd be like this, going straight down. Then that means that stocks are putting in that bottom. And that means that price action is coming into play. That means that market maker entry and exit to sell back to the public is all yours. MMTs. Then on the other hand, we are looking for a capitulated fear level, and from the capitulated fear level, equities and call options at that time would be at certain market levels that are very attractive for entry spreads because they pay a positive market maker debit. Welcome to the pre-market. It is 6:07 a.m. Pacific Standard Time. Let us remember on this opening bell on 10-4 in pre-market is that things aren't as bad. I mean, everything around the world is still down. We all know. And the FTSE's down 150. You got copper in bear market lows. S&P is down 10.5 handles in the futures to 1075.80. And then the Dow futures only down 85 now. 10.445. And we're below that key level in the Dow at 10.5 handle that we had talked about last week. So on the lower level of this pricing action in this time frame is any headline event that could come out to a resolution. And where they have to tarp up over there in them 17 countries, get everything tarped up, is the solution. We will have a very, very strong rally when that day appears. It will at some point in the cycle. There isn't a better time for it than year end. So we are on high alert for that scenario at any moment in time throughout the actual trading day. So blow off fear, that bottom end of the NASDAQ and all of your indices and everything will be putting bottom reversals in at that time. And fear indicators would pop up. This is the high over here, and it did the same thing. MMTs, it did the same thing back in 2008 at right about the same closing price that we had yesterday. And not only that, of course, that was on the way down. And then it fell another 20% from those levels at that time, MMTs, because it did. But the thing that we find attractive in this current futures market is that we are going into a hyped up earnings season that's going to be changing in this October quarter. We're not far from home plate. We're 7 days away or so. Next week, we'll be in them. The first light week of those earnings, but we're looking for a blow off here. When it reverses, equities put in bottoms, calls put in bottoms, puts start to fall in price very quickly, the calls start to rise very quickly, make a market MMT.